Hey traders, Raghee here. Welcome to Charts and Coffee for Thursday, October 28th. And we have a heck of a day lined up with the Amazon and Apple earnings coming up. Good morning, everybody. Great to see you. Great to see you all. So this is the end of the whole FANG blitz of earnings. And what we want to remember here, just bear with me. Oh, there we go. What we want to remember here is that ultimately the market has an interesting window. And I talked about this in the free video last night. So if you haven't checked out that free video, absolutely. I mean, you're on the Simpler Trading YouTube channel. And this would have been last night's free video. This is what we've been waiting for. Kind of situation where have we reached price levels that now get us looking for the pattern? I think a lot of times we look for patterns without isolating those price levels, those decision levels, those reaction levels. So we've actually now done both. All right. Now, in terms of what comes next, we need the confirmation of those patterns. And in the free video, I mentioned that none of the sectors is as prolific in terms of exposure to all three of the major indices as the XLK, as tech generally, because you've got tech as the number one weighted sector, of course, in the NASDAQ, but also in the S&P, and it's number two in the Dow. So yeah, it really, really matters whether or not we see ultimately a breakdown in XLK. That's, of course, Apple and Microsoft. And the pattern that I showed you all in detail, the price criteria has been met. Now we're waiting for the pattern to confirm. The main corner of the market that has not confirmed the rollover, the Dow did, by the way. The S&P did as well. But the S&P, of course, is always in a tug of war between its sort of Dow-like movement and its NASDAQ-like movement. So it's really far more important that we get the confirmation in tech, and I would say not just NQ futures, but the XLK as well. Because the truth of the matter is, Apple, it's an XLK conversation. And like I said, it's just barely confirmed. You can see here where we're breaking down. If you watch that video, the pattern's just barely confirmed. I won't say it didn't confirm. The NASDAQ hasn't yet at all. It has not yet confirmed. So that's the one holdout. In many ways, it's the most important holdout. And look, I'm not really expecting anything from Amazon because Amazon's reflected in the XLY. The XLY is your strongest corner of the sectors that are weighted within tech. So that's what we have, this window between today's earnings after the bell to Wednesday and what has been widely expected. Now, back in even as early as July, but certainly starting in August more widely, I think Goldman put out some of the markers, how often, how much, and when taper would start. And that's supposed to happen in November. So that makes next week's meeting at presser huge in terms of how often. It's expected to be every meeting, which is not every month, by the way. And so once we get confirmation on when it's starting, probably November or December, how much, right? And maybe they push it off a little bit, but I think ultimately the market's probably bracing for that. Now, I was actually on the FinTwit on Twitter, and I love when people use lingo and not within the context of the trend. So I don't follow this person, but I found it very interesting that the connotation, and actually I screen captured the I'm not following them because I want their analysis. I think it's far more interesting to see what the psychology is out in the space. So when I look at it, and where is it? I'm trying to look at my photos. Let's see. Nope, that wasn't it. Here it is. This person yesterday said this is the beginning of the pullback. Maybe it is. But what was really interesting is citing that oil is rolling over. Like a 2 down days is rolling over? Okay. You know, what else did they cite? I think copper was another one. Copper's in chop. There's no rollover in chop unless you're at the extreme. So it's really interesting the sentiment that's out there, because sentiment is what ultimately moves the market. So with all that being said, there's a lot of confusion. There's a lot of difference of opinion, and that's what makes the market go around. What's right is based on time frame and duration. And if you're and this is in fairness to everybody, including this gentleman on Twitter whose um, tweet I screenshot, just a interesting pulse. In fairness to anybody making analysis and trades in this environment and any environment, you have to know the time frame. That's where most confusion and arguments stem. You have to know the duration. What is their timeline for allowing this to happen? And part of that duration is how much risk are you willing to take? If you don't know those three things, time frame or interval, whatever you want to call it, duration, sort of the time horizon, and risk, you don't know enough to understand the analysis or the trade. And so I will take into consideration, I don't know this gentleman's time horizon or duration. If he's looking intraday, yeah, he's probably right. If he's looking long term, I couldn't disagree more. But until I know those things, so please keep that in mind when you're following trades, understanding analysis. Ask, is this time frame the daily, the weekly, the 30-minute, the 5-minute? Is this duration today, the next week, the next month, the next 6 weeks, the next 6 months, right? And you'll find that things make a lot more sense. So anyways, I hope that helps. Let's dive into the questions. And good morning. How you doing, my friend? How's it going, James? I'm still learning how to identify chop. Not looking to play this, but for BA, sure. BA, the bottom of the range would be, okay. So here's what I would say, James. Let the indicators do the work. If I'm looking for ranges, then first of all, here, let me grab my handy dandy drawing tool. Okay. So first of all, if I'm talking ranges, all right, so that's true. Lower JT multi yellow. Perfect. Then I'm going to look at really two things. The Darvis signals and the Darvis boxes. The Darvis signals and the boxes. Because sometimes a signal doesn't necessarily always have a box. Normally they will. So how am I going to identify the range? They're pre-drawn on our charts, aren't they? They're pre-drawn on our charts. So extend out the Darvis. So you're talking what, 20, 206? Yeah, I think we're in the same ballpark. Yeah, exactly. Exactly. You got it. And notice I automated it. I let my tool, in this case, the automated support and resistance of Darvis. And by the way, this tool is not the same as the Darvis and Toss, but don't worry. You can head on over to countdowntrader.com and download the 2.0 version. There you go. You can download the 2.0 version over there. Okay. So do grab that. I think we're in the middle of redesigning the site and doing some things with my blog here, the countdowntrader.com blog. If you've never checked it out, spend some time there. It is a fluff free zone. And you'll see we got propulsion. I think we have Darvis there somewhere too, the 2.0, but I'm not 100% sure where the heck it is. I'll check with Trish on that. But by the way, my color-coded grab candles, the green, red, and blue, and the propulsion dots are there too. And so let me bring up the propulsion dots here for a moment, because these are really, really important. The propulsion dots, we are south of those. See these white dots here? That's the 200 propulsion, which is going to run along the same line as the 200 EMA. And I know when the 8 has crossed, that's one criteria for these dots to line up. We're south of that level. There's a real bearishness here. There's definitely a bearishness here. So yes, we're not double red, but be careful getting too optimistic about a bounce that would take us any further than that. I think we could probably bounce, say, to that level or close to it. But if you are thinking about it, right, keep that in mind. So thanks for the question, James. Good stuff. Hey there, Tim. Good morning. Do I have a watch list building template that I can share to capture key candidates into determining which are the top picks at the bottom of the funnel? Do I have a template? Um, my classes. Now, I know that people want sort of my template is this. It's the multi. There's no template per se. It's more like what's the structure. I mean, I'll give it to you right now. This is for everybody. What's the process? Template, I don't know what you mean by template specifically, but for me, everything's checklists, right? What criteria does it meet? And how many of the total criteria would it meet? So I will always start with the index, then sector, then stock. And that runs through all my classes. So then what's the index up to? Well, they're all choppy. Okay, chop in an index drives us down to the sector. Okay, for example, I'm looking at the OIH and I'm bullish Schlumberger. Okay, do I have bullish structure in Schlumberger? Do I have bullish structure in the individual stocks? Right? So BKR, it's not a no ever, but it's going to lose out in terms of structure to one that's better. So it's really the process of trade list or watch list building. Watch list being what precedes a trade is for me coming to basically the word triage, which actually comes from the French trier, to sort, right? There's a medical connotation which works for us. What is triage? We're prioritizing, aren't we? We're sorting, but we're sorting according to some sort of acute, right? What is a better trend? And that's what I would kind of call a certain acute quality to. There's more proximity, there's better quality. That's what I want to prioritize. So that's really what it is. That's all that it is. And these are things that I've taught for a long time, both in classes and frankly in sessions like this. There's no template. It's a process, right? And then it's a checklist. So in terms of, in this case, oil services, is oil services heading up, and then which stocks are heading with it? I mean, I guess it's so simple. It truly is. It's so simple. The brain wants to think there's more to it. But after that, then I guess if there's a complexity element to it, then the complexity starts at the strategy level, right? What's the structure? What's the strategy? What are the indicators we're going to use? And that's where it gets a little bit more. But the actual watch list building is, I won't say embarrassingly simple, but I designed it to be really, really ridiculously color-coded simple. All right. So I hope that helps. All right. Next up, what ETFs am I long for the rest of the year? What ETFs am I long for the rest of the year? So Pablo, that's a duration question, right? I don't know. But I will say, I know what ETFs are bullish and have the possibility of going long the rest of the year. Remember, when you're watching any financial media, we'll just use CNBC because they are the biggest. Let's face it, they're the ones everybody watches. The rest of them are minor channels. So I give CNBC credit in that regard. But remember the people who go on it. I'm not going to say every single one, but by and large, they're there to predict. I mean, they don't know any more than any one of us know. So, and in terms of prediction, that somehow leads us to believe that there are people out there that know it's going to happen. Wow, that's a superpower. I don't know if the X-Men know about them, but clearly they should be part of the group. Nobody knows it's going to happen, right? But we can work probabilities. John talks about this a lot. And I love that he does because it's so true. And I think this is where, he talks about the impact Mark Douglas had on his trading. And we play probabilities. We don't play certainties. As they say, it's called fishing, not catching, right? So if I know something is moving higher, right? If I know something is generally structured bullishly, right? if I know something is structured bullishly, the probability is it will likely be a candidate for buy the dips, and it will keep moving higher. For how long it'll keep moving higher, don't know. But that's why we don't assume that every day in summer is going to be sunny, especially in Florida, where I live. We know that that forecast could change, and we could see down days. We could see the trend break. So I'll stick with what's already bullish. And of course, I'm going to use right in here my JT multi to confirm that. And that's just the 8, 13, 21, 34 EMAs helping me with the probability of the kind of structure that would lead to higher highs and higher lows. So hope that helps. Can I go through Natty? Sure. We're long, Natty. We got long again. We're still long, Natty, and there's not really much I can do at the current price level. So there's really two parts to everything. One is which direction do you want to go? Right? That's the first question for me. And two is, well, then which price do you want to engage it? So the direction's still looking for higher highs, but price wise, there's nothing I can do here on the daily time frame, which is what I have been primarily trading. So we've had long positions, and so no, there's nothing I can do here. But I love the idea that overall the path of least resistance is higher. Okay. All right. So next up, Tony, I like that. Lately, I need less Dow and more Dow. I like that. That's fantastic. Okay. So next up, that's really great, Tony. Stephen asks, economy slowed to 2% growth due to supply chain issues. Okay. What do I expect from the Fed based on this? Continue to taper. I only know what's been discounted because it's been talked about. What's talked about tends to be priced into the market. That's what discounting essentially is, baked into the cake, right? I try not to. So when I talk about front running something, my use of that word is about me. Am I front running my process? Am I front running a pattern? Am I front running what the Fed's going to say? Front running starts to dangerously creep into prediction that I know this is going to happen. So let me get in now. And those types of entries, while maybe eventually down the road are correct, it will cause you to take a lot more heat than just waiting for confirmation. So I don't expect anything other than what's already known and discounted into the market. And then I'll just wait for them to move the market. And as I like to think about our participation as traders in the market, is we are counterpunchers. I'm not mounting an offense against the market. It's too big. It's too big for everybody. However, I can counterpunch. I can wait for the market to move, and then I'll see an opening. So that's where I have an idea of what's priced in, and if the actual words from the Fed veer greatly from that, we're going to see a readjustment. That's where volatility comes from during these major events. And then if in that volatility I see an angle, I see an opportunity, I'll seize on that. So what do I expect? I expect volatility, and in that I hope to see some opportunity. But I don't know what they're going to do. And frankly, unless you're one of the voting members, we just don't know. So everything that I do is predicated on I don't know what's going to happen, but if certain scenarios do organize, I know what I want to do, right? We know what the catalyst is for action. And that's what I think if we can focus on just accepting we don't know what happens next, but if X or Y happens, we know what we want to do, we'll always be fine as traders. All right. Would I reduce TLT exposure in front of the Federal Reserve? Matt, I'm actually tempted not to. And I will tell you this, I took a whole lot more heat than I was anticipating on this. Now, it's not completely shattered the range and it's still shortable, but I was looking for this Darvis level to do a better job. But we didn't exceed it by a lot. I don't want to be a drama queen about it. This was basically the area in here that we exceeded, but But I'm still bearish. I mean, look at the trend that preceded. It's down. So would I exit this in front of the Fed? Ask me on Tuesday, because we might be, I mean, truthfully, I don't know what's going to happen between now and then, but if it continues to move higher, I may not even be in the market that long, and I'll have to look at a setup post Fed. So ask me Monday, Tuesday, and I'll let you know where I am with the trade. All right. Okay. So, Victor, yeah, I will admit I have way too many Yoda shirts. I have this shirt in 3 colors. Baby Yoda. It's the Grogu shirt. It's the Grogu shirt. Yeah, I have way too many of these. All right. Have a great one, everyone. I'm going to be heading on over to the futures room. We'll take a look at some day trades. We had a great morning of day trades in the sector secrets room. Long QQQ calls, those zero dated calls, which was a great trade for us. We got long, a number of things yesterday, and playing them with those zero dated options. I love that Monday, Wednesday, Friday. Today we'll probably focus on some futures, maybe on some Friday expiration options if the risk is better managed that way. But look, whether you're day trading through futures or options, or maybe you're using the sectors or the indices or even individual stocks, right? That short-term interval right now has been very, very good, especially when you want to position yourself in such a way where you don't really care. You don't want to have to care what's going to happen tomorrow. You just want to keep that very short duration, and the power in that is incredible during these times of confusion, because confusion means what? We don't see follow through, right? Okay, be good to each other. I'll see you all same time, same station tomorrow.